Okay, everyone knows that Apple is a highly seasonal stock. Like many technology companies, this is a standard pattern. So that the December quarter is the big quarter of the year. The September quarter is a run up into that. So those are the two big quarters of the year. And the first two quarters of the year are really a decline from that. So what you tend to get is, all things else being equal, you tend to get good run-ups in the stock in the last 6 months of the year, and some weakness in the stock in the first 6 months of the year. And that would certainly be a pattern you might be looking for 2015, because after all, we had this huge surge in sales of iPhones with the introduction of the iPhone 6 and the 6 Plus. Drove December earnings and revenue for Apple wild. But the stock hasn't really retreated. In fact, from, say, January 27th to the middle of February, the stock went up about 18%. And some of that's just leftover momentum. Even though the stock is seasonal, not everybody always says, well, it's seasonal, so I'm going to pull out. But some of it is also just what I would call Apple Watch fever. That we're starting to see stories like the one that Reuters picked up from the Wall Street Journal that said Apple had ordered 5 to 6 million Apple Watches from its supplier, the assembler Quanta, which is a Taiwanese company but assembling in China. And that is sort of, that's going to be introduced in April. That's sitting out there on the horizon. People are looking at this and going, this could be another huge product. So they're bidding up Apple shares. And so on something like, well, let's say February 18th, Apple closed at a little over 128. That's close to, well, it is a new all-time high for the stock. It's close to the 130, which is the top of the Bollinger Band. Bollinger Bands are this technical analysis measure that looks at creates a band of movement for the stock between at the top of the band. When it goes over the band, you can say it's overvalued. When it's down the bottom or bottom half of the band, you can say it's undervalued. Well, right now the top of the Bollinger Band is 130, 128 is very close to that. It looks like we're starting to get a fair amount of hype in the stock, and that's setting us up for a March quarter that could be disappointing. We're certainly setting ourselves up for an April introduction that, hey, if they only sell 4 million Apple Watches, it'll be a disappointment, despite the fact that would be a huge success in a category that no one else has been able to get to move. So if you're looking at this and saying, I'd like to trade seasonality in Apple, which I think is a good thing to do with a lot of technology stocks, you might want to say, hey, 130, I've got 132 target price in Jubek's Picks portfolio. If you're going to trade seasonality, we're getting to the point where you really need to decide whether you're going to do it, whether you've got the courage to sell Apple, despite the fact that it's still going up on these seasonal patterns. This is Jim Jubek for Jubek Asset Management.